Okay, hello guys. Welcome to another video. On this video, in this video, we'll be doing weekly analysis on US30, and as you can see, this instrument looks so easy to trade. Um, the other one is NAS 100. You can take a look at that, or S&P 500. All these instruments move the same way, similarly, but might not be exactly, but they move the same way. And for a newbie or someone that is struggling with consistency or with technical analysis, you can try these pairs because they are always trending. So, and all it takes you is to join the trend. You don't need to be stressing yourself on trying to figure out where the direction of the market is going. But it's more easier to trade a trending pair than to trade pair that are not trending. And as you can see, since April this year, 2025, this pair has been trending. And since January, you can see it's only moved down for a few months. Then it started trending since April. So it's a good pair to trade. You can check it out um, if you find this interesting. So let's just mark it. The analysis will start from daily time frame, and this is the daily time frame. And let's just do the structure mapping. As you can see, as you know before, the structure mapping will be when the market do impulse correction, impulse correction. We want market to take out this and take break above here. Once this is happening, we have complete structure low here. Then we wait for market. This low has been confirmed. We wait for market to take out the same process. Then this high will be confirmed. Then wait for POI mitigation. The market continue. So that's the process of us marking the structure. It's not that deep. That's how. That's just the perspective behind it. So let's start from here. So just to show you how this structure works and to show you that it works the same way all the time. So as you can see, let's start from this low. You can see market push up, give a value pullback, push up, then come back for this low. So it means that our low is here. You can see our inducement or a valid pullback is here, and we can only wait for POIs. But remember, as I said, market do not promise you POI mitigation. What market cares about is only liquidity. So, and as you can see, market sweep this high, but at the same time, we have different type of POI in the market. For example, we have order flow, which is this. If you want to go by the order flow, you can see this is the order flow, and the refinement of order flow is the order block. So market can mitigate which any of it. In fact, market can also mitigate what we call the fair value gap. You can see market mitigate this fair value gap. So it doesn't matter. What matters is market come back for liquidity. So if you're lucky, market mitigate your POI, then you can have a trade. And if it doesn't, you have nothing to lose. Market is just doing its thing. So you can see after this first attempt is not counted as a break of structure for us until another candle come and close above here. That's when you have a break of structure. So you can see we now have a break of structure here. So it means that our low will be here. So we wait for market to do something like this, Sure you understand. Then the moment market come back for this, for one of these, then this will confirm our high. So let's look at that same process, and you can see when market push up, push down, push up, push down, this not valid pullback, then market keep pushing up, and you see the finally market push up here, push down, then market did what? Market came back for this one. So, and you see market came back for it, then that's when we have our high confirmed like this. So we have our high confirmed. So now until market pull back and now break above this high, that's where we can have a complete structure. So you can see markets come back for this and come back for this liquidity, then market push up, then we have a complete structure. So in terms of POI mitigation, If you're looking for POI, this one POI, which is extreme, which is high probability, and the other one is the next POI below these inducements. And as you can see, we do not have any valid POI here. So I think yes, everything, this one has been mitigated. This one has been mitigated. So this is not going to be valid for us. So you can see market just do its thing. Remember, this daily time frame, and we are not going to trade on daily time frame. Daily time frame will only tell us the directional bias. It's only in lower time frame that we trade. Assuming that this market come here, this trade come here and got to this level, then that's when we will now switch to 1 hour, because we are using daily as an higher time frame. That's when we switch to 1 hour. Then we will now look for our entry confirmation. Then we target this daily high. So that's how we do top-down analysis. So as you can see, market do its thing again, and this low serve as our low. The moment market close above this recent high that it created, and if see, look at this, and you can see that we had a push, we have a impulse correction, impulse correction, impulse. So you can see first attempt, market supposed to come and take this low, but market tried to induce more people to the market. Then they push the market to the up. Then the moment this market push up and come above this level, in terms of value pullback, you don't need candle close. You just need that level to be taken out. So this will now serve as our new inducement in daily time frame. So we want this move to come back and take out this low. And if we were to mark our POIs, we can use this week. Why? Because this week take out this level. This is an advanced way, but I can probably, maybe I will do a video on this. This is what I call hidden POI. So it's also a POI, and if you look at it, it's come with a kind of it doesn't have fair value gap, but if you look at it closely, we still have fair value gap here. So you make it you make it valid. So but these are POIs, and it's resting at the I call it hidden POI. So that's it. So it's only, maybe I will do video on that. So look at this. When market got to this level, the market push up, then break this high. You see, this is not break of structure. Why? Break of structure can only be valid. This is not break of structure because there is no liquidity before this market push up. So break of structure is only valid after liquidity has been taken. And if you look at this, break of structure, liquidity has been taken. Break of structure, liquidity has been taken. Some people will keep marking this as break of structure, and well, it might work for them, but from my own perspective, that's not how I perceive the market. So so let's continue. So you can see this is the current situation in this market. And what are we looking for again? We are looking for market to come and take this inducement, because if you are to look at it, immediately market mitigates here. These are the moves that the market did. Then push. Then market might come, it might not come, it might give another one, then this one will be shifted to this level until market come for it. That's when we'll now start positioning for buy continuation. So this is the current situation here, and let me switch to this level and see how we can take an entry from this, zone, lower time frame entry. I think someone has asked me for video on this, so this will be another opportunity for you to see how we can take an entry 1H. So 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 you can see in this situation now, this is how 1H structure look like after market mitigates this level. So, and first attempt market mitigated it, second attempt market come below it. So market still mitigate this like this. So what we are going to look out for is this. Look at it. When market mitigates this level, we have this, the market went back and closed below. So it means that our last break of structure is here in 1 hour. And if you look at it closely, you will see that this level will serve as our inducement, because this is a value pullback that the market did here. But for the fact that market has mitigated our POI, you can use this level, this inducement level, as a what? As a change of character. You can use this as change of character. Why? Because market mitigated your higher time frame POI. So now we have this as a change of character in 1 hour. Then there is a two ways you can actually enter this trade depending on uh, the one that market presents that is realistic to you. You can see after that market did what? Market take out this. We have change of character. It means that we are looking for buy, and you see market creates a small valid pullback here. If I can expand it, you can see we had push up, push down, then push up. The market now do what? Market now come back for hit. Sorry, I think my mouse is misbehaving. So in this case now, this level is where my entry will be. This change of character, I prefer to use this whole order flow to execute my trade. Why? Inducement is here and I'm expecting market to come back for it. But sometimes if market do not come back for inducement and I see what happens there, all I do is to just execute my trade from here, then put my stop loss here. So then I'll target my RR, probably this level of 1 to 3. So, but this is the, here you see, so this is the entry. So, and another scenario is when you have a situation like this, when you have a situation whereby market mitigates your POI like this, push back. So if you don't want to be aggressive, you allow change of character to happen by market come up like this. Then let market create inducement and go like this. Then you use this as an inducement. If market sweep this low or close below it, or if this is a sweep or close below, whichever one, you need an inducement and you wait for market to come down below here, then you can execute your trade. Probably if you have an order block here and target the next level. So these are ways to do it. And on higher time frame and lower time frame confirmation, let me show you something. If this is your higher time frame and your 1 hour is like this, a market do this. A market mitigates your 1 hour and probably change character. Remember I said your inducement will now turn to change of character after market mitigates your higher time frame POI. First attempts, markets tend to fake out and also come down, because if you are trying to buy here, then you will be stopped out if you are greedy with your stop loss. But if you put your stop loss here, then you will be safe. So you wait for the same process to happen. The first change of character tends to be fake out, while the second one tends to be to hold. Then you use this again for change of character. Then if market creates inducement, fine. If market do not create inducement, you can easily take a trade from this last order flow. So you just wait for market to mitigate this level like this. Then put your stop loss here. Then you target your wherever you want to target. So you will see most of the time market will come here because first of all, look at it. Market has mitigated higher time frame POI and it has given you direction, and it also clear this liquidity, this one below here. Then the next thing is for the market to continue to. So you use this order flow to enter, then you target your wherever you want to take. So those are the higher time frame um, and lower time frame entry confirmation. So and that's exactly what happens here. You can see, then you can have a good entry, then target here. If you if you put your stop loss here, you're fine. But the safer place to put the stop loss is this level. Then probably if you target 1 to 3, you will still have a good trade. So these are how lower time frame confirmation works. So if you go back to daily time frame, you can see that this what I will be preparing for in US30. I want the market to come here. I want the market to come and take out this inducement. Then where is my POI? Then this is my POI, because this is the last valid POI that the market created. Then why is this valid? You can see that it has fair value gap in between. So I will expect market to do two things, or I will be looking by watching the market to do two things. Is either market come like this, then drop and mitigate this, then I will be looking for 1 hour confirmation, then boom. Or markets create another pullback. So it means that this pullback will now be shifted to this level, because this will now be an inducement. So if market now come back, if market then come back and take out this and repeat exactly what I want, because there is no POI here, there's no POI here, so this is the only POI, then I will enter the same with the same lower time frame confirmation. So that's it for US30, and I hope you learn one or two things from this video. So if you enjoy content like this, you can subscribe, follow, and probably share to anyone that might need this. So thank you for this video. Bye for now.